Hey traders, Park here with another video on the sectors. This indicator is my sector rotation indicator. I have it anchored to the October, so really to the fourth quarter to now. This is where we're looking at everything, and that's 78 days. So right now, from October, the S&P 500 is up 2.62%, and right now we're looking at our 11 sectors here. We can see what's leading, what's weakening, what's lagging, and what's improving. Right now, we're not seeing anything weakening or improving. But we can see for number one is material. Materials since October is up 12.7%, 7%. And then number two is going to be XLE, energy sectors up 10.12%. And its relative strength to the S&P 500 is 7.5, and XLB relative strength to the S&P 500 is 10.08. And coming in number three is healthcare, and it's up 9.77% since October, and this relative strength to the S&P 500 is 715. If I zoom out, you can see this is where I have the indicator anchor to, and then we squinch it down a little bit. You can see where these squiggly lines indicate the relative strength for these different sectors as compared to the S&P 500. This histogram right here just represents risk on, risk off, and it's telling us still risk on. For our offensive sectors, it's 4.7%. And for our defensive sectors, it's 2.58%. And you can see everything is lagging. You can see where all these numbers correspond to these different sectors. So I'm going to push it back to the actual chart with the S&P 500 on it. And you can see what's going on. I'm going to push down my sector rotation indicator, and we can go visit some of these charts. But right now, this indicator is my average. I have it set on 12 months average range for the S&P 500, and you can see where we're stuck in this middle range. We haven't hit this higher field, and we haven't hit this lower field, but we can see right now this higher end right here represents our 2 deviations away from the open for the month of January over a 12-month period average, and this represents a 2-month deviation. This line right here, this shadow right here represents 1 month one deviation, and this represents 1 deviation. And this top of this right here represents the 12-month average from open, high to open. And this right here represents the open to low 12-month average as well. And we can see we're stuck in this bound right here. I also put this fib on here as well, looking at this high point and this lowest point from November. And I also have my VWAPs on here. So I have a 1 month, a 3 month, 6 month, and a year. And then you have the weeklies there as well. Well, it should have been hidden, but I also have my chart VWAP as well. So if I zoom out, you can see I have my chart set to 3 years, and the chart VWAP, it's continuous accumulation for whatever chart period you have on there. So zooming back in, we can see the S&P 500 really hasn't made any strides. It's really just stuck in this range. We can go to the NASDAQ as well, QQQ, and you're pretty much going to get the same thing. This higher level right here of this white cloud just represents a fib level of 214. I know it's not the traditional 23.8, but I like 214. And this higher point of this cloud right here represents 38.2, and this is 61.8, and then 78.6, and then you have the 50 line right there. So what really moved the market this week is earnings. AI is really telling everybody to show me. Oracle, ORCL, I think that was one of the ORCL, one of the ones that didn't really play out that well. And then when you can see how far down it is smooth as well. It actually has hit its average for the 12-month period average, and actually hit its 3-year VWAP as well. But it's below its 1 month and 6 months and its yearly VWAP as well. So, and I think the other thing that dragged it down, Nvidia as well. Nvidia hit its 12 month average from open, um, yeah, and then it bounced up from there, but it still hadn't pushed above the midpoint of the average. So you had AI plays that kind of held the market down. You had the Denmark geopolitical stuff with the tariffs on Denmark that kind of collapsed everything. And then when Trump went over there and said, "I'm not gonna do it," the market spiked, and then you had gold hitting the record highs, still hitting record highs. So GLD, and you can see it's way outside of those bounds as well. So any of the metals, gold, all those different things really pushed up, and how the S&P 500 really closed down flat. The Nasdaq was up, and I think the Dow was slightly down. When it comes to our sectors, what they really show, you saw the different sectors and how they played out. And the top three are, materials, healthcare, and what was the other one? Materials, healthcare, and energy. Those are our top sectors for this time period. Since October the fourth quarter. Energy has been leadership, really top performing in the S&P 500 sector. What else? So really doing what we should think about for next week is really the Fed decision midweek, and I think that's Wednesday. So that's Wednesday. Really not predicting, but just preparing for them to make a decision. Apple, Microsoft, Meta, Tesla are in the blast radius next week. They can drag the index and sectors down. With them, they have their earnings. Plenty of those sectors you really should be trading: XLK, XLC, XLY, all to become earning proxies. So, excuse me. The other thing we have is January 27th, consumer confidence. Wednesday 28th, durable goods. The 29th, the initial claims of personal income, PCE inflation data. Really decide on your posture, when it comes to offensive, defensive, and it's just going to be a wild week, really, with earnings coming up. I would make a watch list, really, when it comes to the different earning plays. So the different earnings would be, what has earnings next week? Let's see. Earnings. So this from Benzinga. These are the ones that have earnings in their days for the earnings. So this is everything that's happening next week. So just be on the lookout. You can look at that. And we already looked at our top risk on, risk off, and really, if I drill down for the S&P 500, let's drill down to the S&P 500. So we're gonna look at it like this. So this is a whole lot of volume. So this white bar represents two deviations of volume. So buyers really came in off of those tariffs. So if I were to drill down into, I'm going to do a 10-day, 5-minute. I'm going to drop this study down to a 10-day average and really let it shine. So this is basically what we did today. We dropped down to this 38.2 field down here. And then we pushed above. I thought we was going to hit our average, 10-day average for this week, and we didn't hit it. We really was ranging. And you look at yesterday's price action, all we did was range in between the previous day high and the previous day low for the S&P 500. And then you can see this is our daily VWAP and our chart VWAP as well. And then our 1 month, 6 months, and everything. So that's basically what we did, but if I were to have the indicators show the rest of the days, So it's only showing my last period or the current period. And this is basically what it looks like. The indicator, based off of 10-day average, high and low. And you can see this is the day where Trump said that he wasn't going to put the tariffs off. And you see where it really just pushed up. But this average indicator just gives me some understanding what's going on in the market, and also a daily average range that I could play off of as well. Especially when I'm thinking about stocks are getting oversold or overbought. So I'm going to go back to my 3-year, and I'm going to silence this study, and I'm going to let these VWAPs shine. Right now, I only have it showing the current VWAPs. That's why it kind of looks kind of funky. But if I were to show the rest of the VWAPs, this is what the indicator actually looks like once the year really spreads out. And you can see how these VWAPs have played a role. Excuse me, and everything. This pink VWAP here is our 6-month VWAP. The yellow ones are quarterly VWAP or our 3-month VWAP. And you can see this cyan color, this blue color right here is our 1-month VWAP. Excuse me. I have the daily VWAP hidden, but you can see this is the purple one, magenta colors are 1 week VWAP as well. But this side of the indicator really shines when you're looking for areas of liquidity or support and resistance. Just putting this on here, you can see where we were in April when everything crashed down. This is April, right? Yeah. So it hit our 3-year VWAP, and then it bounced from there. So that's pretty much going to be the end of the video. Just stay safe out there and really pay attention to what's happening within these sectors. I'm going to put this back on here as well. And if you want any of these indicators that you see in this video, they just looking at the link in the description. But this is your I'll just call it my multi VWAP indicator. But it really just anchors itself to these different time periods. So, and I'm going to shift my sector rotation indicator from the anchor day to a rolling day, and I'm going to leave it on 63 because that 63 days represents a quarter. So if I were to do I changed everything. So right now we're looking at what's weakening, lagging, and improving and leading on a rolling period. And you can see where we use our momentum and our rolling period 63. So right now what's leading is the same thing that's been leading: materials, energy, and healthcare. And we can see everything that's lagging right here, and we can see financials are improving within our model now, and we're still showing risk on. So just be safe out there, and I'll be looking for plays according to the different earnings and really what the with the SPY and the NASDAQ and Dow really shows me the following week, especially with this tech sector and their earnings. Stay safe out there. God bless. I hope this video helped you. I appreciate you guys taking the time out to listen to what I had to say. God bless.